Hello, I'm James and thanks for joining me on Kalkine TV for Smart Market Insights. In this edition, I'll take a look at Australia's gross domestic product data for the first quarter of 2022. The Australian GDP data for the March 2022 quarter has exceeded all expectations, with the latest report from the Australian Bureau of Statistics, or the ABS, showing that the economy expanded by 0.8% during the quarter. In a highly unexpected turn of events, the gross domestic product has surpassed even the highest forecast presented by economists. The first 3 months of 2022 marked the second consecutive quarter where the economy grew after a contraction in the September 2021 quarter. The higher than expected data has been a breath of fresh air for Australia at a time when inflationary concerns are meddling with the country's post-pandemic recovery. Rising prices of goods and services have affected Australians and residents of most advanced nations. The economy's annual growth rate stood at 3.3% in the March quarter, lower than the annual inflation rate of 5.1% reported by the ABS. Though higher prices have proved to be a boon for Australian exporters, subdued demand for goods and services has fueled fears of a recession. Meanwhile, GDP data beyond expectations is pointing towards more aggressive interest rate hikes by the Reserve Bank of Australia. A key constituent of the observed rise in GDP is the rise in demand across several discretionary categories. Household and government spending led to the rise in GDP, with the total final consumption contributing 1.4 percentage points to GDP. As COVID-related restrictions eased, household spending on transport, hotels, cafes and restaurants subsequently increased. Recreational activities took centre stage as individuals were finally able to step out of their homes. The government also put in efforts to ensure that the flood-affected areas of New South Wales and Queensland received and continue to receive the necessary relief measures. Australia has witnessed many climate adversities in a relatively short period of time, including bushfires and severe flooding. Moreover, the household saving ratio of 11.4% during the March quarter was the lowest since the start of the pandemic, but was above pre-pandemic levels. This signifies that consumer demand took off during the period as many individuals dug into their savings from the pandemic. Australian businesses also profited from the higher prices of commodities and other consumer goods. As supply constraints plagued European nations, Australia's exports remained stable with only a small decline. Australia's terms of trade, which is the ratio of the price of goods exported to the price of goods imported, reached a record high level in the March quarter. Meanwhile, home building remained lower paced in the second consecutive quarter. This was majorly due to the lack of adequate skilled workers and a delay in the shipment of raw materials, along with challenging weather conditions to contend with. The removal of the Home Builder grant also contributed to this slowdown, and the latest GDP figure is well beyond the expectations of the Big Four banks. Essentially, this means that the economy might be in for further monetary policy tightening, with the RBA embracing more rate hikes in the coming months. Like most other central banks, the RBA can also conduct a larger rate hike in subsequent periods after its first hike. Fears loom that high interest rates would remove some of the existing momentum away from the economy, and overall this would be burdensome for mortgage holders, although it could help ease inflationary pressures in the long run. Alright, well that's all for this edition of Smart Market Insights. Another episode coming your way tomorrow. Until then, make sure to keep it locked on Kalkine TV for the latest market insights, business news and exclusive interviews. I'm James, signing off for now.